If I told you there was a capital city in Australia that clocked 18.9% growth in the last 12 months, you'd probably guess Perth or maybe Brisbane, right? Wrong. The capital city you ignored just became Australia's hottest market. We are talking about Darwin. While the East Coast is cooling down and affordability is crushing investors, Darwin is putting up numbers that look like a typo. Properties are trading below replacement cost. Yields are sitting at 6 to 7%, and there is a specific weird niche, furnished properties, where demand has surged by a staggering 239%. On paper, this looks like the value gap of the decade. But before you log into real estate or domain and start making offers, you need to hear the rest of the story. Ladies and gentlemen, welcome back to PropSpotter. My name is Sean, and PropSpotter is the smarter way home. If you're looking to buy your next investment property, PropSpotter is a service that helps you get started by, firstly, a 2-hour strategy session to help you find the best suburb, and secondly, using our proprietary system to find properties as soon as they hit the market so that you are one of the first to call the real estate agents. For more information, you can visit our website at propspotter.com.au. But for now, let's get back into this episode. Let's look at why the bulls and the buyer's agents are charging into Darwin. The narrative for 2025 is simple: scarcity. Construction costs in the Northern Territory are astronomical. To build a standard 4-bedroom house in Darwin today costs significantly more than buying an existing one. That is the definition of a floor under a market. You are buying dollars for 80 cents. Then you have the rental market. It's tight. We're seeing massive demand for short-term and long-term furnished accommodation. Why? Major defense contracts, mining projects, and gas infrastructure. All of these workers need beds. Their companies are paying premium rents, and that drove a 239% spike in demand for furnished rentals last year. Cash flow positive from day one. Double-digit capital growth. It sounds like the holy grail. So why am I not buying? Here is the reality check that a real estate agent won't tell you. That 18.9% growth, that's not a boom. That is more than likely a dead cat bounce. If you zoom out, and I mean really zoom out, Darwin has had zero real growth over the last 10 years. In fact, if you bought a unit in Darwin in late 2014, you are likely still underwater today. This isn't a growth market. It's a volatile boom-bust town masquerading as a capital city. And let's talk about who lives there. Darwin is the smallest capital in the country. It is tiny. The liquidity is terrible. When the market turns, you can't sell. It's like a roach motel. You check in, but you may struggle to check out. But the biggest red flag isn't on the charts, it's on the streets. You have to understand the demographic reality of the top end. This isn't gentrified Melbourne. The social dynamics here are distinct and different. You have a very high proportion of social housing and housing commissions interspersed heavily throughout the suburbs. We're talking blocks where you can see 40 to 50 to 55% housing commission spread amongst a couple of streets. We're talking about neighborhoods where investment grade assets sit street by street next to severe social public housing. Check out an old video from Spanian to see what it's like on the ground of Palmerston in Darwin. That furnished demand surge I mentioned earlier, that 239% spike, that's not families moving in to put down roots. That's a transient workforce. Contractors, fly in, fly out workers. They are here for 12 months and then they leave. When they leave, who replaces them? If the project ends, the music stops and you are left holding an asset in a city with high insurance costs, high social issues, and a local population that relies heavily on government support to pay the rent. Like I said earlier, look even deeper and you'll find that in the last 30 years, most Darwin suburbs have not grown much. Aussie Home Loans report from 2018 shows suburbs in Malak, Woodroffe, and Driver trading at $130,000 to $150,000 in 1999. The link to this report is in the bio for those interested. Those properties have gone up 3.5, maybe 4x if you include renovations and the like into those prices. You're still sitting pretty with yields at 6 or 7%, but for how much longer? So, does the value gap exist for buyers in 2026? Sure. The gap exists because the risk is priced in. You are being paid a higher yield to take on the risk of a volatile economy, a transient tenant base, and a social environment that turns a lot of owner occupiers away. Darwin is a casino. You might win big on a single roll of the dice in 2026, but the house and the history of the last decade always wins in the end. Thank you very much, ladies and gentlemen.